even mentioning ever selling your Bitcoin can be a controversial topic. But if you are going to take profit this cycle, then at least do it right. Today, we're going to be looking at some proven strategies to help sell your BTC at the price cycle peak. And firstly, I'd like to just cover a few things. I know everyone's going to hate this topic of discussion and quote Michael Saylor to say ever trading your Bitcoin is a sign of whatever. But realistically, a lot of people do want to make a little bit of profit on their BTC, even if it's just to rotate into other assets. For me, it's the opportunity to reaccumulate at considerably lower prices. Some people need to pay for rent and food, etc. It makes some sense to take some profit on BTC. Historically, this is an asset that has drawdowns of 70, 80+%. So if you can time your sells even remotely close to the peak, you're probably going to have the opportunity to reaccumulate at lower prices. Even if you think BTC is going to top out at $250,000 this cycle, and we see a very conservative 60% drawdown, that's still $100,000 that you'll have the chance to reaccumulate out. You could probably sell. You could have had plenty of opportunities to take some profit and still probably reaccumulate at lower prices. So I know it's a controversial topic of discussion. I know everyone says, but Michael Saylor's never going to sell. Yeah, but it really does help that he's worth $10 billion and has made a couple $1 billion in the past few years alone from his shares that he owns. So for those that are wanting to take a little bit of profit on their positions this cycle, like I will be doing, not 100%, I'm never going to sell everything, but definitely going to be a portion of my capital that I'm going to scale out of. If we're going to do that, we want to sell as close to the peak, of course. And while we can look at metrics like the MVRVZ and say, well, it'll be really easy to just sell 100% of my position when we're way up here as soon as we get into the red zone. And yes, while that does sound easy on paper, and if that does happen, I'll probably increase my selling a little bit. We have to be prepared for every single circumstance. We have to be aware that we may not get into this red zone on the MVRVZ score. We may not get a pi cycle top cross. We may not get any individual top calling metric correctly predicting the peak. They may undersell it, they may oversell it. Either way, we need to have confluence, looking at multiple metrics, and just take a very pragmatic and data-driven approach to our profit taking. Again, in granularity, we're scaling out. No one talks about going 100% all in at the BTC bottom, yet everyone seems to think they can sell 100% of their capital at the exact BTC top. Doesn't make sense. Everyone suggests dollar cost averaging in, strategically dollar cost averaging into Bitcoin during dips, but on rips, no one wants to sell. So what we're going to do is look at a few different tools to do this. And first and foremost, we're going to start with the active address sentiment indicator. What we can see is this is looking at the percentage change in network active addresses compared to the 28-day price change in BTC, which is the orange line. And what we can see is the addresses value actually has these deviation bands, these green and red deviation bands above and beneath price action. So what I'll do is just zoom in on the previous cycle here, for example. What we can see, if I just scale the chart a little bit better so we can see, as price was coming to a top up here, for example, when we first got to around $40,000, we saw this huge divergence where price had massively increased and maybe wasn't backed up by a huge increase in people actually utilizing the BTC network. And while there wasn't immediately a BTC sell signal, once we crossed above this upper red deviation band, it happened when we were about here at $23,000. It did indicate that we were maybe getting to overheated territory. But I wouldn't actually use this metric until we crossed back beneath this red deviation band, which happened at about $33,000 on this occasion. But again, during the price cycle peak, we got a sell signal here at $52,000, again at $58,000, and just a slight one there about $63,000. And again, as a double top, we got another one at 48, and then over here at about $62,000. All very good sell signals to scale out of your BTC. So definitely look at something like the active address sentiment indicator to look at underlying network utilization, the fundamental usage of Bitcoin as a currency and as a network, and its price change. Alongside that, something like the fear and greed index. I know this is a really basic one, but historically this has actually worked pretty well to help at least act as confluence for your BTC profit taking. What we can see, again, zooming in over the previous cycle, for example, as we rallied from around $3,000, if I just move this way, when we had incredibly fearful sentiment in the market, up towards $14,000, we hit a value of around 95 on this. Once we start getting fear and greed values above levels of around 90, again, that indicates that our top is closing in. People are just simply too bullish on the market. Do I think on its own that this is the best metric to use? No, of course not. But this is why we're looking at multiple metrics. Once we see an active address sentiment overheated, fear and greed index overheated. Something like the short-term holder MVRV also overheated. These are good indications that we may be at least due a little bit of a retracement in the market. So the short-term holder MVRV is looking at the average accumulation price of new market participants, the realized price. What we can do is look at the ratio, a relationship of that average accumulation, that cost basis to the underlying price of BTC to see the unrealized profit and losses in the market. And what we can see is a pretty common pattern within data like this one. What I can do is just zoom in to the previous cycle again here as a good example. And if I just refresh the chart, is if we look at this, what we can see is human psychology in effect in real time. What I can do is just draw on a line, a couple different lines on the chart here to show around here, which is about 33% on this level, and slightly higher, say around here. I didn't draw that great on this level. What we can see is there's definite patterns in investor behavior when it comes to points in the market where we usually see reversals in price. So what we can say is this is currently, well, the first line on this was at around 33 to 40%. So once we see investors at around a 33-40% profit on their average accumulation price, like we've seen multiple times throughout BTC bull markets, and even turning points where once investors get back to a 33%, we see a rally even higher. Once we get to this point, we usually have a little bit of choppiness. We usually either have a little bit of a retracement or, like I said, if we're above that, maybe a bit of a bounce. So look at this realized price, multiply it by 1.33, or look to the short-term holder MVRV ratio to look at a potential point. And then above that, like we could see, around 74% or anywhere around that 70%, anywhere from about 66% upwards, we're getting into pretty overheated territory. Like we could see in the run-up from $3,000 up towards about $14,000 here, this reached a value of 1.74. So we were 74% above this level, indicating a huge amount of unrealized profits from new market participants. Again, as we ran up to $40,000, it was a value of 7.5. Again, as we were up to a new all-time high, it was a value of 73. And then from there, again, about 64. So anywhere above about two-thirds, about 66, say, well, 64% profit, like we've seen multiple times as well. That's a good indication that we're maybe getting a little overheated. And this isn't just for one cycle that we've seen price action like this. If I just draw on a line about here for about 33%, we can see considerable times where we've actually reached this. And then again, if I draw about here, about 70%, not perfect, but as you can see, we've reached this one here, and then here, and then here, and then a couple times there, and multiple times in this cycle. Once we reach this level, good indication that we're getting a little bit overheated. And then once we're really getting overheated and we're hitting these upper boundaries here or surpassing that, again, good indication that the market is getting a little bit frothy. Alongside that, one of the easiest ones to use, the Bitcoin funding rates. Just so simple. Once we see people paying a huge premium just to keep their derivatives positions open, that's usually a good indication that people are a little bit overly bullish. This is almost like the fear and greed index or a sentiment check, but where people's actual money comes into play. Once people are betting that price will continue rallying higher, usually we see a little bit of the opposite. Unfortunately, a lot of these metrics show that a vast majority of people are wrong most of the time, and being a counter trader actually works out in your favor a lot of the time. Once we see incredibly high funding rates, people are paying annualized rates of 10, 20, 50, 100% just to keep their positions open, expecting continued upside price appreciation. When that happens, again, another piece of confluence to say maybe we're getting a little bit overheated. And finally, something like the Bitcoin Crosby ratio, which works great on the daily chart, as you can see here, marking local peaks in price action as well as bottoms. But specifically for profit taking, once we enter this red zone, it does indicate that we're maybe getting into a little bit of overheated territory. One thing I like to do is, if you are a site subscriber, you get access to this metric within TradingView. So not just specified for the daily time frame on Bitcoin. What you can do is look at this on the 4-hour, which I love to do, or even lower. So what I've done on TradingView here is just go to the 15-minute time frame, because this kind of plays two parts here. While we can use this as confluence, once we're seeing the daily Crosby ratio incredibly high and the 4-hour and potentially even lower time frames, that definitely gives us a good signal that we're potentially getting into overheated territory. But when looking at all of these metrics in unison, you shouldn't take them as to sell 100% of your portfolio as soon as you get one of these sell signals. It should be just a small percentage. And maybe it shouldn't be just an immediate sell signal. What I like to do is, rather than selling as soon as all of these start pointing towards one thing, is add a trailing stop onto my positions. So if we look to here, just as an example on the Crosby ratio, once we start getting into this red territory here, and assuming that all of the other metrics were again pointing towards a little bit of a retracement potentially being possible, we reached this red zone around here. And then if you just add on a trailing stop, something like this, just a few percent or a value of the ATR, suddenly you're not getting stopped out of your position until considerably higher. It gives you that flexibility to potentially sell Bitcoin at higher prices. Now, this isn't going to work every time. So if we look to here, for example, you'd add a trailing stop and maybe you'd actually sell it at a slightly lower price, but this is where we're selling just a few percent at a time. We go to something like here where we come into this red zone, we add a trailing stop loss, maybe we get stopped out. We're still in the red zone, we add another couple percent for a profit, and there we go. We're selling at considerably higher prices than when we first got the signals. Again, here we could maybe put it in, wouldn't have made a significant amount, but this gives you the opportunity to potentially start scaling out at much higher prices than what was signaled. If you look at something like the 2017 cycle, or we can see if I just zoom in here, Bitcoin's price entered this red zone when the price was around $10,000 around the end of November, start of December 2017. And within just a couple weeks, price had doubled to near $20,000 while this value was still in the red zone. So if you'd have taken all of your profit and seen price double, that'd have been really difficult to deal with. If you drop down onto a lower time frame, add some trailing stops, 1% here, 2% there, 5% there, etc., then that can really ensure that you're scaling out as much as possible, as close to the BTC peak as you possibly can. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, the most important thing when it comes to taking profit is knowing that you will not sell everything at the exact top. It's essentially impossible to do. Like we discussed, we don't really have this notion of buying 100% of your portfolio at the exact BTC bottom. Everyone suggests dollar cost averaging in. Not many people suggest dollar cost averaging out, which is definitely something you should be doing. Looking for confluence across multiple metrics and selling a few percent of your position every single time they're all aligning. Potentially with something like a trailing stop to give you that opportunity to allow price to rally even higher and sell at considerably higher prices. And what we can see is using tools like the Fear and Greed Index, Funding Rates, Active Address Sentiment Indicator, Crosby ratio, and short-term holder MVRV, we can look for these confluence signals of overheated market conditions. Along with that, if we do get some confirmation from something like the MVRV Z-score or these macro cycle metrics that really do time market cycle peaks, then all of that together will really increase our probability of scaling out our positions as close to the peak as possible. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And in saying that, another great thing if you do get a site subscription is pretty much all of our metrics come with alerts. So you're not having to monitor every single day, every single one of these metrics. You can set up alerts. They come straight to your email. That's how I do a lot of my investing, profit taking, accumulation, etc. And to be honest, gives me a lot of inspiration for these videos when certain metrics flash off. So what you can do is come here, set them all off, turn them on, turn them off, etc., and see when they're all coming through in real time, which really helps make sure you're not missing any of these signals. And of course, as always, let me know your thoughts below in the comment section and on social media. If you're going to be taking some profit this cycle, don't leave any hate comments or anything. If you don't want to sell, that's absolutely fine. Some people do. This is a nice space. Let me know your thoughts below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.